What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a big banger BBIG update. This is going to be on raw price action today, you guys, and there's actually going to be no notes as we're going to be freestyling this all the way. We're running a little bit short in time, but we did notice a couple things that we were calling out yesterday. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could join our trading community, ARCa. The description below has that information for you guys to review. Anyway, with that said, let's begin. Okay, you guys, so we ended up getting the breakout of that triangle that we were talking about yesterday. But before we continue on that, let's start off with our beloved pattern right over here that we've been looking at for quite some time. This is our right-angled ascending broadening wedge, and we can see based on this large candle that we had today, you guys, that we are potentially breaking market structure. And the reason I can say that is because the high of this candle is higher than this one right over here. We've been in a descent starting with this one here on the way down, and as you can see, this one is above that now. So this could be presenting the breakout of market structure and potentially something coming up for BBIG. This could happen based on its behavior against the broader markets, because sometimes it faces some inverse behavior, right? So let's go ahead and move on to the next chart and see what we got. So yesterday we were looking at, we were actually reviewing our ascending bearish formation right over here. This is an ascending channel. This candle was the one that we talked about using the SMA 10 as a form of resistance and a continuation to the downside. We also said that this candle here was part of a lower low structure that we were looking at, and these two were already breaking that structure. So we were noticing we were noticing symptoms of a move to the upside. We also said that we didn't break out of the channel just yet. We wanted to see a daily closure below the support of the channel. We actually did not get that, and we recovered. We reclaimed that channel and have now used the 50-day simple moving average as a form of resistance. As you can see, we surpassed it, and now we closed right at it. So let's go ahead and move on to the next chart. This is the triangle that we were speaking of just yesterday, you guys. And we did say that these triangles tend to realize their breakout at about 70 to 75% completion, or as we get closer to the apex, we see a likelihood of breaking out a lot higher. So we did get that, you guys, and it looks like we are coming back to test our newly converted resistance into support. So with a couple adjustments to the channel itself, we can actually see that it is following the golden rule of three, which we've talked about several times on this channel and also on the Discord and on Twitter. So we have test 1, test 2, test 3, come back for consolidation or accumulation, if you will, and a fourth try to the true breakout. So this is, in doing so, we actually do have to come back and test our newly converted resistance into support. So I am looking for a daily closure above this support line, and we do have a couple things working for us. So we let me just put this down right over here, and we haven't even loaded our EMAs, right? So let's load up a standard 7-day, 30-day period EMA and take a closer gander at this. Okay, so you can see that we have the SMA 10 and the 7-day exponential moving average as a form of support, along with our newly converted resistance into support and the NOT 236 at 93 cents, you guys. So this is we do have some support on our side right over here. Also, as you can see right over here, let's just make sure that that is an EMA. So yes, our 30-day exponential moving average is also serving as support. So right now, the only thing above us is truly the previous candle closures and the 50-day simple moving average as a form of resistance, but it looks primed to break through it, you guys. So a lot of this action can be validated after the FOMC catalyst for tomorrow, you guys. So we do have to practice some patience right over here. So now let's pull up the statistical side of this and take a look at what's happening. So we've actually been looking at this for a while, you guys. For the new viewers, we are looking at volatility here, represented by this indicator BBWP. Volatility is direction neutral. So only because we start moving up right here does not necessarily mean that price action will start going up to the upside. And likewise from the fully expanded levels on top. So we have been each bar that you see right here is a daily print since we're on the daily chart. You're looking at extreme levels of contraction right over here, you guys, for quite some time. And in the daily time frame, I do consider anything under the 15th percentile to be critical lows. And for that matter, we've actually never in the entire trading history of BBIG have ever seen this amount of volatility buildup from the fully contractive levels, even from the fully expanded levels. You can just take a look here that there's no such timing as what's happening right now, you guys. In order for us to gain a bias and direction, we pair this with momentum. So this is a momentum oscillator. Stochastic momentum is the name of the indicator, and it's very similar to an RSI. And what this gives us is that bias and direction, right? And we can look right here that the pivot is starting to turn to, it's now neutral. It's not facing to the downside anymore. And I said that it was likely for us to do this trend line support type of situation before a continuation to the upside. So I have taken iteration of every, I have taken note of every iteration from every single time that volatility has reached below the critical percentile of 15% and under, 15 percentile and under. So every single time that this happened, I have taken the upside thrust from that and the duration of that, and also the correct iterations versus the incorrect iterations to gather an overall mean for us to review. And from that, we can see that out of a total of 25 iterations, 16 were correct. That gives us an average upside accuracy of 64% with an average upside thrust of 62.14% over the span of about just over 15 days. This is proof of work right over here. And if we apply that 62.14% to price action, we can actually see a target that's very desirable. It's landing right in confluence with our 1.618 golden ratio. This is typically an area where we like to take the trade as a psychological component. And now this is also in accordance with the 1.618 and our 62.14% move to the upside. This is the 200-day simple moving average, you guys. And in order for us to validate this move, we actually have to meet this criteria. We need for the volatility component of the BBWP indicator and the moving average to move upside the 15 percentile critical low zone, continuing with an upside pivot alongside the stochastics momentum with an upside pivot. Then we can start adding our averaged mean, and we can make some gains in that area, you guys. So let's go ahead and move on to the next chart and see what we got. So this is going to be the RSI. Let's gain a bias and direction for the next trading day, although it is going to be dependent on the FOMC and jobs on Friday. But that doesn't mean that we can't just take a look at this real fast. So let's go ahead and start. I'm sorry, let me just go ahead and reset that down there. We're going to go ahead and start with a 30-minute immediate short-term time frame. New listeners, please listen up. This RSI is split into two zones. This is the bearish control zone and the top zone being the bullish control zone. Both zones are split into two. This inner zone right here is bear weakness percentile and bull weakness. The outer zones are bull strength, and you have bear strength right down here. So just in case you hear me mention anything like that, you'll know what I'm talking about. So we are within the shallow areas of the bull weakness percentile right here, suggesting a continuation to the downside, you guys. And we are also below the moving average, which is usually bearish. Let's see what 15-minute has to say. 15-minute is micro time frame, but we can still see. Yeah, we're still kind of direction neutral right here, you guys. You don't want to give any weight when we're within the shallow areas of either weakness zones. Let's move on to a higher term. This is going to be the bi-hourly, and it is suggesting a continuation to the downside and approaching again the weakness shallow zones right here. So this is potentially signaling an immediate short-term sideways trading, you guys. 4 hours should be indicating similarly. Yep. Similar with the 4 hour. Let's go to the 6 hour. The 6 hour is also very, very similar. It's approaching it's approaching that shallow area of the weakness from the bulls. Let's go to the 12 hour and see what we got. Same here, you guys. We haven't. All this indecision is likely for the economic catalysts that are coming up. So I'm not a financial advisor. Please take whatever I do show on these videos as a form of entertainment. Do your own DD and we'll be okay, you guys. So I wouldn't recommend entry. I usually think that playing Fed plays are kind of a gamble. So we don't want to do that, you guys. We want to just trade based on data and based on price action and stuff. That's just me, you guys. I am a short-term trader. I look for opportunities like these, or after the Fed meets, it's usually the easier trade. So this is actually a pretty good place for me to leave the video, you guys. And yeah, I wanted to show you one more thing, but it's okay, you guys. I already did show it to you yesterday from the BBWP. But yeah, I'm going to leave the video here, you guys. Please remember to join the Discord. The description, the description below is going to have all those links for the Twitter, for everything. Join. Let's discuss this analysis further. And with that said, I wish you well. I'm going to talk to you guys tomorrow at the bell. Adios.